It's your boy Ramsey Jr. I've never been able to post videos due to some challenges and issues, but all to the glory of God, I've rectified it. Today we'll be talking about 90% probability trade, and what we'll be talking about specifically is order block. Understand what is an order block? An order block is one of the institutional reference points. You understand? What we're talking about most is the order block that will give you a 90% probability trade. Where you enter your trade, you'll be safe and secure. That is what we'll be talking about today. And please, if this is your first time of seeing my video, smash on the subscription button, like, comment and share to enable you get more videos. Now we'll be talking about 90% probability trade, and what we'll be talking about specifically is an order block. You understand? A valid order block. And when you heard about institutional reference point, institutional reference point is an order block, a fair value gap, liquidity void, mitigation block, and all that. There are many, you understand? There are many, but today we'll be talking about an order block, a valid order block that will give you a probability trade, another block in which that if you trade with it, you are safe. You have nothing to panic. First of all, you have to identify the trend of the market. I keep on saying it. You have to identify the trend of the market. You can't just come into the market and just enter into the market without identifying the trend of the market. You understand? Now we'll be talking about an order block. Now look at this trade. Let me mark it out. Look at this order block. Look at this order block here. Look at this order block here. You see this bearish order block. Look at this bearish order block here. You understand? Look at this bearish order block. Looking at the trend of the market, we are in uptrend. It reversed from this point, and the market started going up from this point. You understand? This is an order block. This is a fair value gap. You understand? You ask yourself, what is a fair value gap? A fair value gap is one of the institutional reference points that you can also trade with. You understand? Now, how you know a valid order block? Another block that if you trade with, you are sure. You understand? We have a bullish order block and a bearish order block. Now look at this. Now let me draw and show you what a fair value gap is. Now look at the height of this candle. Look at the height of this candle. I'm going to show you different types of them, not just one, but I will try as much as I can to show you different types. And equally look at the low of this candle. You understand? When you look in between these two lines that I draw here, you find out that there is a gap in between these two lines that I draw. When you look at this, you find out that there is a gap in between these two lines. This is what they call an order block. You understand? When you trade with an order block, you are with a fair value gap. This is what they call a fair value gap, and this red candle is another block. So when you trade a fair value gap, automatically you are good to go. When you trade on an order block equally, you are good to go. But the reason why you are advised to trade on an order block that has a fair value gap around it is because it is the only institution reference point that gives you assurance that your trade will be a successful one. Look at this. This is a bullish. This is a bullish fair value gap, and this is a bearish order block. Now look at this. From here, trade started coming down. When you look here, you see that there's another block here too. There's a bearish order block. Let me equally mark it. Let me equally mark it. Look at this other block. Look at this other block. You see this other block. You see this other block. This is an other block. You see. Now let me show you another block. Let me show you another block here. There is another block here, but you can't trade this other block. Reason? Because it didn't have a fair value gap. Now look at this one that I've already marked. You will find out that there is a fair value gap around it. And look at this fair value gap here. Let me mark the highest of this candle. Now look at the middle. You see that this is a fair value gap. So when you want to enter your trade using this fair value gap, let me just say you want to short this market. You understand? You won't just enter this market without covering the whole other block. You understand? You won't just enter the market without covering the whole other block. Let's, for instance, this is your trade. You see that I've covered, let me say 1 by 2. Even if it's 1 by, let me say 1 by 2. You understand? This bullish candle is your other block. You have to cover it to make sure that you are successful and to make sure that you stay in a safer place to avoid being liquidated. When you look at this trade, you find out that it's a good one. You understand? It's a good one, and later price will later get to it. If you mark this trade from here, you see that the height of this candle, they are almost the same. You understand? Price must surely get to here. You understand? Price must surely get to here before it pushes to a certain direction. You see? So when you enter this trade from here using this other block, using this fair value gap, you are good to go. Let me look for another block that doesn't have a fair value gap around it. Let me look for another block that doesn't have a fair value gap around it. Let me look for another block that doesn't have a fair value gap around it. Okay, look at this other block. Look at this other block. Look at this bullish other block. Look at this bullish other block. Let me mark it out. Let me quickly mark it out. Please, if this is your first time of seeing my video, smash on the subscription button, like, comment, and share. Look at this other block. You see, it touches the height. It touches the height of this. It touches the height of this red bearish candle. You understand? So this now you cannot trade on this other block because it's not a valid order block. There is no fair value gap. There is no imbalance around it. A fair value gap is an imbalance in which price will later retest to it, like what happened here, what I showed you here. You understand? This is a fair value gap, an imbalance. This is another block, and price later retest to this, to here on this chart, and starts moving another direction. From here we have a downtrend and a reversal from this point. You understand? So if there's anything you don't understand, do wait to notify me on the